Imagine walking into the exact same bank. Same building. Same employees. Same chair. But depending on how much money you have, the bank treats you like a completely different person. Today, you'll see exactly how banks treat you at every level of wealth from $0 all the way to 25 million. And by the end, you'll understand one secret that almost nobody talks about. Most people believe banks are neutral. They think banks simply hold money, approve loans, and provide customer service. But that's only part of the story. Banks are businesses. And every business asks one question before making any decision. How much value does this customer bring us? That single question changes everything. The surprising part: banks don't judge people because they're rich. They judge them based on how profitable they are. To show you exactly how this works, let's follow one man throughout his entire financial life. His name is Michael. Nothing about Michael is special. He's not born into wealth. He's not a genius. He's just an ordinary American trying to build a better future. As his finances change, watch how the bank changes too. The difference is shocking. Level 1 net worth, $0. The beginning. Michael is 22 years old. Fresh out of college. Student loans. No savings. A used car. A checking account with less than $50. He walks into his local bank because he wants to open his first real account. The employee smiles politely, hands him a few brochures, explains the basic checking account, mentions overdraft protection, asks if he'd like a debit card. The conversation lasts about 10 minutes. Nothing more. Nothing less. Michael leaves thinking, that wasn't bad. But here's what he doesn't know. To the bank, he's almost invisible. He has no investments, no mortgage, no business, no retirement account, no credit history worth mentioning. He isn't making the bank much money. He's simply another customer. Thousands walk through those doors every month. Banks call customers like Michael retail customers. Basic accounts. Basic service. Because at this stage, there simply isn't much financial opportunity. And that's perfectly normal. Almost everyone starts here. The first lesson. People often believe banks exist to help them become wealthy. But banks are designed to make money. Helping customers is part of that process. Understanding this changes your mindset. Banks aren't your financial coach. They're your financial service provider. There's a huge difference. Level 2 savings, $10,000. A year passes. Michael works hard. He cuts unnecessary spending. Takes extra weekend shifts. Lives with roommates. Slowly, his savings reach $10,000. For the first time, he feels financially secure. Then something interesting happens. One afternoon, he receives an email. We noticed you've been doing a great job saving. We'd like to discuss additional banking products. Michael feels important. He schedules an appointment. The banker congratulates him. Offers a savings account, suggests a credit card with rewards, mentions certificates of deposit, talks about building long-term relationships. Everything sounds helpful, and much of it actually is. But remember, the bank isn't suddenly becoming nicer. Michael simply became more valuable. His deposits helped the bank. His future borrowing could help the bank even more. The relationship has started. What most people miss. Banks don't just store your money. They use deposits to support lending and other banking activities. Your money becomes part of a much larger financial system. That's why banks love stable depositors. Reliable customers create predictable business. And predictable business creates profits. Level 3, $100,000. Several years later, Michael gets promoted. His salary increases. He invests consistently. His emergency fund grows. His retirement account keeps climbing. His total assets finally cross $100,000. This time, the bank notices immediately. Instead of waiting for Michael to schedule a meeting, someone calls him. Congratulations on reaching this milestone. We'd love to review your financial goals. This conversation feels completely different. They're no longer discussing basic checking accounts. Now they're talking about investment services, retirement planning, insurance products, financial planning, portfolio reviews. Michael feels respected. But something even more interesting happens. The waiting disappears. Appointments become easier. Questions receive faster answers. Problems get solved quicker. Not because the employees suddenly like him more, but because his lifetime value has increased. Banks know something important. Customers who reach six figures often continue growing. Serving them today may generate decades of future business. So the experience improves. A hidden truth. Notice something. Michael didn't ask for better service. He didn't complain. He didn't threaten to leave. Nothing changed except one thing. His financial value. Banks continuously rank customer relationships. Not publicly, but internally. The stronger the relationship, the more attention you receive. Most people never realize this system exists. Level 4, $500,000. 10 years have passed. Michael now owns a successful consulting business. His investments continue growing. He owns real estate. His retirement accounts are healthy. His total wealth approaches $500,000. One morning, an invitation. Private client services. Priority banking. Dedicated financial support. A personal banker. Suddenly, Michael has a direct phone number. No long customer service menus. No waiting on hold. If he needs something, someone answers. Fast. The bank also begins offering exclusive products. Lower lending rates, higher transfer limits, special investment opportunities, mortgage reviews, business banking consultations. The experience now feels premium. But here's the important question. Why? Is it because Michael became a better person? Of course not. It's because his financial relationship is now worth significantly more. The bank sees years of potential revenue, business accounts, investment management, loans, credit products, future referrals. Michael has become a high-value client, and high-value clients receive high-value service. The psychology changes. Something fascinating begins happening inside Michael's mind. Years ago, he felt nervous entering the bank. Now, employees greet him by name. They remember previous conversations. They ask about his business. For the first time, the bank doesn't feel intimidating. It feels welcoming. The building never changed. Michael did. Level 5, $1 million. Michael is now 42. 20 years ago, he walked into this same bank with less than $50. Now, his net worth has crossed $1 million. Not because he won the lottery. Not because he inherited wealth. But because he consistently invested, avoided lifestyle inflation, and let time do most of the work. One Tuesday morning, his phone rings. It's not the customer service department. It's a senior relationship manager. Michael, we'd love to review your complete financial picture. Notice the wording. Not your checking account. Not your savings. Your complete financial picture. That single phrase tells you everything. At this level, banks stop thinking about individual products. They start thinking about your entire financial life. A different kind of conversation. Michael walks into the branch. This time, he's greeted before reaching the reception desk. The relationship manager already knows his name, already knows his business, already knows roughly how much he has invested. They sit in a private office. Coffee is offered. The conversation feels more like a business meeting than a bank appointment. No one is trying to sell him a basic savings account anymore. Instead, they're discussing tax-efficient investing, business financing, commercial real estate, trust planning, estate strategies, credit backed by investments. These are conversations the average customer never hears. Because the average customer doesn't need them. The bank's goal has changed. Instead of earning a few dollars from monthly account fees, they're looking at a relationship that could last decades. Level 6, $5 million. Several more years pass. Michael's business expands nationwide. His investments continue growing. A few properties appreciate dramatically. After decades of disciplined financial decisions, his net worth reaches $5 million. Now something changes again. The bank no longer sees Michael as a successful customer. They see him as an important client. And those are two very different categories. Private banking begins. One afternoon, Michael receives an invitation. Not to a regular branch. To a private banking office. The atmosphere is different. It's quieter. More comfortable. More discreet. There are fewer people. Long waiting lines don't exist. Appointments are scheduled around the client's availability. The relationship manager introduces Michael to specialists. Investment advisors, commercial bankers, estate experts, trust professionals, tax coordination teams. Instead of speaking with one employee, Michael now has access to an entire network. Because at this level, one mistake can cost millions. And preventing expensive mistakes is often more valuable than chasing higher returns. Time becomes the luxury. Most people think private banking is about luxury furniture, fancy coffee, or beautiful offices. Those things exist, but they aren't the real benefit. The most valuable thing banks offer wealthy clients is time. Michael no longer spends 45 minutes waiting on hold. He doesn't explain his situation to 5 different departments. He sends one email, makes one phone call, and someone coordinates everything. When your business generates thousands of dollars every hour, saving time becomes incredibly valuable. That's why private banking exists. Not to impress clients. To make complex financial lives easier. Access changes everything. Michael also notices another difference. People start bringing opportunities to him. Exclusive investment presentations. Commercial lending opportunities. Business networking events. Not every opportunity is worth taking. But access itself has value. The average customer searches for opportunities. High net worth clients are often introduced to them. That's a major difference. An important warning. This is where many people misunderstand wealth. They think private banking makes people rich. Usually, It's the opposite. People become wealthy first. Then private banking becomes available. The service is a result, not the cause. Believing otherwise can lead people to chase status instead of building real wealth. Always remember that. Level 7, $10 million. Michael turns 52. His consulting company has become one of the most respected firms in its industry. His investments have compounded for decades. His real estate portfolio continues producing income. His total wealth now exceeds $10 million. This is where banking becomes almost invisible. And that's exactly how Michael likes it. Banking without the bank. Michael rarely visits a branch anymore. He doesn't wait in line. He doesn't fill out paperwork in the lobby. Most requests happen with one secure message. One phone call. Sometimes the bank comes to him. The relationship has become proactive. Instead of Michael asking questions, the bank contacts him first. Interest rates are changing. We've identified an opportunity. We should review your liquidity. We recommend discussing succession planning. The conversation is completely different from what it was 25 years ago. Reputation matters. At this level, the bank is protecting something besides money. Its own reputation. High net worth clients often know other successful entrepreneurs, investors, executives, business owners. One satisfied client may introduce several more. One unhappy client may quietly move millions elsewhere. Retention becomes incredibly important. That's why service standards continue improving. Not because wealthy people are more deserving. Because losing them is expensive. The real asset. Michael notices something else. The wealthiest people he meets rarely talk about expensive cars, or luxury watches, or designer clothes. Instead, they talk about businesses, cash flow, taxes, investments, risk, succession, philanthropy. They've learned something most people never discover. Real wealth isn't about looking rich. It's about building systems that continue producing wealth long after you're no longer working. That mindset is what separates lasting wealth from temporary income. Level 8, $25 million. 28 years have passed since Michael first walked into a bank with less than $50. Today, his net worth has reached $25 million. The building is still there. The logo hasn't changed much. The front doors are the same. But everything else is completely different. Michael isn't treated like an ordinary customer anymore. He's treated like a long-term business partner. And this is where most people finally understand how banks really work. Beyond banking, Michael receives an invitation to meet at the bank's private wealth office. There are no long queues, no ticket numbers, no crowded waiting room. The meeting has already been prepared. Everyone in the room knows why they're there. The relationship manager begins. Michael, today isn't about your accounts. It's about protecting your family's future. Notice that. Years ago, the bank focused on checking accounts. Later, it focused on investments. Now, it's focused on preserving wealth across generations. The conversation has completely evolved. The biggest surprise. If you've been paying close attention, you may have noticed something surprising. At no point in Michael's journey did the bank suddenly become good. And it never became bad. The bank stayed exactly the same. Its business model never changed. Only Michael's financial position changed. That's one of the biggest mindset shifts you can make. When people say, "My bank doesn't care about me," What they often mean is, my financial relationship isn't valuable enough yet. That might sound harsh, but understanding reality is far more useful than believing comforting myths. How banks actually make money. Let's pull back the curtain for a moment. Many people think banks simply hold money in giant vaults. That's Hollywood. Modern banking works very differently. Every customer creates potential revenue in different ways. Some customers use checking accounts. Some carry credit card balances. Some take mortgages. Some finance businesses. Some invest through the bank. Some need wealth management. Some require international banking services. The deeper the relationship, the more valuable that customer becomes. That's why banks encourage customers to keep more of their financial life in one place. Not because it's always best for you, but because it's good for their business. Understanding incentives helps you make smarter decisions. Michael's biggest financial mistake. You might think Michael made perfect decisions. He didn't. A few years after becoming a millionaire, he almost made a costly mistake. An investment advisor presented an exciting opportunity. The projected returns looked incredible. The presentation was polished. The charts looked impressive. Everyone in the room sounded confident. For a moment, Michael was ready to invest millions. Then he remembered something his first mentor had told him years earlier. Never invest in something just because someone else benefits when you say yes. So instead of signing immediately, he went home. Read every document. Asked independent professionals to review it. Waited 2 weeks. Eventually, he discovered hidden fees that would have quietly reduced his long-term returns. The investment wasn't fraudulent. It simply wasn't the right fit. That experience taught him an important lesson. Even premium clients must ask questions. Better service does not eliminate the need for good judgment. The difference between rich and wealthy. Throughout Michael's journey, he met hundreds of successful people. Some earned enormous incomes. Others inherited money. Some built companies. Some invested wisely. Over time, he noticed a pattern. Rich people often focused on income. Wealthy people focused on ownership. Rich people asked, "How much did I earn this year?" Wealthy people asked, "What assets are working for me while I sleep?" That single shift changes everything. Income can disappear overnight. Assets can continue producing income for decades. Banks understand this very well. That's one reason they pay close attention to what you own. Not just what you earn. What you can learn, no matter your net worth. You don't need £25 million to improve your financial future. You don't even need £1 million. You simply need to build the habits that eventually lead there. Start by living below your means. Save consistently. Invest regularly. Protect your credit score. Avoid unnecessary debt. Increase your skills. Create multiple sources of income over time. And most importantly, think long-term. Banks reward financial stability. But more importantly, financial stability rewards you. Michael returns to the same branch. One quiet afternoon. Nearly 30 years after opening his first account, Michael visits the same branch where his journey began. He isn't there for a loan. He isn't there to invest. He's simply nearby and decides to stop in. As he walks through the doors, a young employee smiles. "Welcome, how can I help you today?" Michael smiles back. The greeting reminds him of his very first visit. For a moment, he's 22 again. Nervous. Hopeful. Unsure of what the future holds. Then he looks around. different employees, new technology, modern furniture. But one thing remains exactly the same. Every person walking through those doors is at a different stage of their financial journey. Some are opening their first account. Some are applying for a mortgage. Some are building businesses. Some are preparing for retirement. Everyone starts somewhere. Very few finish where they started. The final lesson. The real goal isn't to receive better treatment from a bank. That's just a side effect. The real goal is financial freedom. Financial freedom means making decisions because they're right for your life, not because you're desperate. It means having choices, time, peace of mind, security for your family. The best financial milestone isn't a premium debit card, or a private office, or a relationship manager. It's waking up every morning knowing your money works for you, instead of you constantly working for money. That's a level of wealth no bank can create. Only you can. Conclusion and call to action. So, the next time you walk into a bank, remember this. The building doesn't decide your financial future. The employees don't decide your financial future. Even the bank doesn't decide your financial future. Your daily financial habits do. Every pound you save, every smart investment you make, every unnecessary debt you avoid, every skill you build, those decisions quietly shape how the financial world responds to you over the years. Michael's story isn't extraordinary because he reached £25 million. It's extraordinary because he understood one simple truth. Wealth isn't built in one big moment. It's built through thousands of small decisions made consistently over decades. If you start making those decisions today, your relationship with money and with every financial institution you encounter can look completely different 10, 20, or 30 years from now. If you enjoyed this story and learned something new, make sure to like the video, subscribe to the channel, and turn on notifications. Because the next story might completely change the way you think about money.